Welcome back, investors, to the After Hours show brought to you by Ticker Time News. I'm Adam, and we have a lot to discuss today. FedEx had an amazing, amazing quarter. Their second quarter, the last quarter when they came out in December, they had a stellar quarter, but their stock did not react in a positive way. It actually went negative. And the reason it did that is because there was no guidance for the third quarter. They didn't know what was going to happen, so they didn't release guidance. Similar, not exactly the same, but similar to what they are doing now. So let's get into the numbers real quick. That's what is most important, and then we'll hop over to the stock chart for FedEx. So first off, revenue of 21.5 billion, operating income at 1.06 billion, operating margin 4.9%, net income $939 million dollars, and earnings per share or EPS of $3.47. Yes, FedEx is kicking it. They are running on all cylinders right now. Here's what their CEO had to say, Fred Smith of FedEx. I'm exceedingly proud of our FedEx team members who are moving the world forward through the delivery of COVID-19 vaccines, the most important work in the history of FedEx. He went on to say, as reflected in this quarter's results, continued execution of our strategies is producing strong earnings growth and margin improvement across our company. We expect demand for our unmatched e-commerce and international express solutions to remain very high for the foreseeable future. That is excellent for FedEx. So, operating results increased primarily due to strong volume growth in U.S. domestic residential package and FedEx International Priority Services and pricing initiatives across all transportation segments. These factors were partly offset by costs to support strong demand and expand services, variable compensation expense, higher labor rates, and one fewer operating weekday. So FedEx, they're just doing an amazing job, and I see FedEx continuing to do an amazing job. The amount of growth cannot be overstated in the residential package portion of their business. UPS and the USPS and any other delivery company has been facing this challenge of exponential residential growth in package deliveries, all because of, well, you guessed it, COVID-19. So they also mention in here that severe winter weather during February reduced the quarter's operating income by an estimated $350 million. So just think, if we didn't have that bad stretch of winter weather, they would have made an extra $350 million to what is an already outstanding earnings report. So they also say the weather significantly impaired operations at several of the company's largest facilities, including the primary FedEx Express hub in Memphis and FedEx Express hubs in Indianapolis and North Texas. Now, their outlook, FedEx, this is what they say, FedEx is unable to forecast the fiscal 2021 year end. So they're not sure where they're going to end up this year. And they cite the delivery of vaccines and the possible divergence from e-commerce to brick and mortar. Possible. What they do say as forecast, earnings of $17.60 to $18.20 per share on the year. And that's all that they give us. So we have good support at $240. Excellent support down there if it does fall that far. We also have this support slash resistance. It varies from time to time at around $260. This area right here is a good area to watch. You can see recently, March the 12th, and today, March the 18th, it acted as resistance. Then we got the news about their earnings, and then we shot up to right about the top of this box. And the reason this box is significant, if we go back here, December of 2020, it acted as support several days in a row right here. And if we go back any further to November, the 1st of November, it acted as support for several days right here. And then almost the entire month of October, it acted as support as well. So if FedEx can get above this and maintain support here, then it can go higher to our resistance line, which is going to push it to the $280 to $290 area per share there. So if you're looking at FedEx and want to get in, I think your buying opportunity is really around $260 if you can get it for that amount. Set a stock alert, 260. Remember, the next 3 months, even with a solid performing company, the market as a whole can drag the stock down. The next 3 months are going to be volatile as the economy finds its footing. So set a stock alert for 260. If you can get it there, that's a good area. You can set a secondary stock alert if you want to dollar cost average your way down. You can set it for about $245. That also has really good support. Those would be the two areas to buy into FedEx for a long position. Not a short one because there's going to be a lot of volatility over the next 3 months. Smashing the like button, click and subscribe, join our family of investors. We put out content daily. You can also help us and support our work on Patreon by becoming a member. And just leaving a comment, letting us know how we're doing also helps out greatly. I will see you tomorrow after the markets have closed.